Becoming a trader is actually much more easier than most people think. As long as you have the right tools and the right information, you can start. So in this video, I'm going to teach you the things you need if you want to become not just a trader, but hopefully a profitable one. Let's start from the beginning. The first thing, and this might surprise you, is just a phone. You don't need those fancy setups that most trading influencers are showing you online. And if you have a laptop, that can also help view the chart in a better way. But trust me, a phone is more than enough to get started. The next thing you're going to need is trading applications. There are two types of apps you need to understand. The first one is for charting, meaning where you look at the market, where you study price, where you do your analysis. For this, I personally use TradingView. It's clean, it's free to start, and I think it's the best option for beginners. Now for beginners, I would personally recommend something like Vantage Markets. I think it's quite simple to get started with and beginner-friendly enough for most people. Then, later on, once you start understanding how the markets work a bit better and gain some experience, you can move to more advanced platforms like NinjaTrader or Interactive Brokers. All of these platforms are compatible with MetaTrader, also known as MT4 or MT5. MetaTrader is basically a third-party application that many traders use because it makes trade execution much easier and more convenient. Now, once you have your charts and your platform ready, the next thing I strongly recommend, and please, take this part seriously, is opening a demo account. Do not rush into a live account immediately. Focus on building an edge in demo trading. A demo account gives you the opportunity to learn how the market moves without risking real money. You can make mistakes. You can test your ideas, how everything works. And most importantly, you can lose fake money instead of real money while you are still figuring things out. Every trading platform offers a free demo account with paper money ranging from $1,000 to $10,000, depending on the platform. So after that, you need a powerful strategy. But not 5 strategies, not 10, just one. Hopping from strategy to strategy leaves you learning nothing. And before you know it, a year has passed and you haven't built a strategy. Find one strategy and stay with it for at least 3 to 6 months. Backtest it, journal it, take screenshots, study it deeply. Because trading is not really about finding the perfect strategy. Most of the time, it is about understanding one strategy deeply enough that you can execute it consistently, over and over again, without second-guessing yourself. Trading is not something you rush. That is why becoming a profitable trader takes time, discipline, and consistency. Now, before I show you the actual strategy, I also want to quickly talk about markets. Personally, I prefer trading futures and forex, things like NAS 100, S&P 500, EURUSD, GBPJPY. I find that these markets respect technical analysis quite well, which is what every aspiring profitable trader needs. But that is just my preference. If you want to trade crypto, metals, options, something else, that is completely fine. Just make sure you really understand what you're trading because those markets can be brutal most times. Okay, now let me teach you the strategy, step by step. The first thing to understand is liquidity. Most beginners open a chart and immediately start looking for buy or sell signals, but that is not where I start. The first thing I want to know is, where is the liquidity? When traders place their stop losses, they usually put them above old highs or below old lows. So what often happens is the market pushes into those areas, triggers all those stop losses, takes that liquidity, and then moves in the opposite direction. This is why liquidity is the first thing I look for. It tells me where the market wants to go first. The next thing is displacement. After liquidity is taken, I want to see a strong move away from that area. Now this next part is where the actual entry comes from, so pay attention. After liquidity is taken and displacement happens, that fast move usually leaves behind what we call a fair value gap, an FVG. And this is where I want to enter. Instead of chasing the move, I wait. I let price come back into that fair value gap. If the market moved away with that much strength, there is a good chance it revisits part of that move before continuing. That pullback into the FVG is my entry. It gives me a logical entry, a logical stop loss, and a much better risk to reward. The last thing I need before entering is a clear target. I always know where I want price to go before I click anything. Usually, it is the next liquidity area above or below the market. So before I enter, I already have my entry, my stop loss, and my take profit. Everything planned, no guessing. So let me put the whole model together. First, liquidity gets taken. Then, displacement, a strong move away. Then, price retraces into the fair value gap. That is my entry. Then, price moves toward the next liquidity target. That is my take profit. That is the whole thing. Simple and logical, and everything happens in an order that makes sense. Take this strategy, study it for 3 to 6 months, backtest it, journal it, review your trades, and stop looking for something new every week. The traders who succeed are not usually the ones with the most complicated strategy. They are the ones who stayed with one good strategy long enough to actually master it. Thank you for watching, and I will see you in the next one.